Friday, January 6th, market analysis, Stan Ehrlich. Well, this is the end of the first week of 2023, albeit a short week. Monday was a holiday. It's only trading 4 days. But today we have, as I'm starting out again with the S&P 500, specifically the spider daily chart here, we may have a breakout that has legs. We have made a new high, and it's very, very close to the highest high for the last approximate 3 weeks. So if we can maintain prices a little bit above what we have so far as a high, or more than that, I think we have an upside breakout. Right now it looks good, looks likely. We've had on this 1 minute chart a couple of reactions. So far they have all been higher lows and higher highs after the initial whiplash in the opening, half an hour. So it came back after opening higher, dropping down to around unchanged, and is now up 6 1/4. And that's not the high. It's looking good so far. This would be the second highest close for the last 3 weeks. What about the DIA, the Dow Jones? No, by the way, on the spider, let me get back to that one more time. I have 2 upside objective areas, assuming that we have a good, strong close. And those price levels are the beginning of technical resistance, the lows that we saw back mostly in January and early December, and that level is about 392. There is a small gap, half a point, I believe, around 395.50, and that's the second objective to the upside and my highest one. I am not expecting a new high for this trend since October's 13th, October lows, bullish engulfing, ER buy signals. Bingo, I couldn't ask for more. My classic signal, that's why the system is built to detect those type of turns. So otherwise, if it's not going to have any legs, we're going to see it drop right back down to the bottom of this trading range for 3 weeks and maybe break out to the downside. I mean, it's got to break out sooner or later. The trend is a little in question here. If we do make new highs, then my upside objectives, 92, 95 area and a half, need to stop the rally and start it to break down. Otherwise, the lows that we have looked at here at the very beginning of the year could be a lot more profound than I'm expecting. Okay. I do think that this market is in the medium to latter stages of building some sort of major bottom. And I've alluded to a head and shoulder bottom, which needs another couple of 2 to 6 weeks in that time frame from now to have a low a little lower than we've already been lately. I'm talking 370, 65, something like that. Then at the end of this month or the beginning of February, if those prices are reached and it starts to head north, you may have a giant last shoulder on a head and shoulder bottom, which started back on June 20th, 17, June 17, the middle of June. Okay. DIA. All the statements stand basically the same. There's nothing except for, it's interesting to note that we have already seen new highs for 3 weeks this morning on the DIA, and it is staying so far above all of those previous highs, which it hopefully will do, and then maybe make some more strength and make a new high before the end of the day. By the way, it's 9:50 California time, so there's 3 hours and 10 minutes still to go for the week. I like what I see. There's not a lot of strength, I don't think, on the DIA, unless something profound is shifting in the background. Longer term fundamentals. I hate to say that, but yeah, maybe. Fundamentals drive a trend, whereas technicals help you pick turning points a lot more accurately. Next, the QQQs have been all along for this long-term bear market the weakest, the quickest, the fastest, etc. And the rallies have not been as big or as good, etc. The turning points, of course, are approximately the same or exactly day by day. October 13th is still the low, of course, on the QQQs and the DIA. That's the bottom for all three indexes, and what a whopper. And anything significantly lower than today's low, which is almost exactly the same as the low for the trading range, you have a double bottom. And the DIA is QQQ, sorry, is having a bullish engulfing. Now, this would be an ER buy signal, and the price bar would be turning green if we had been low enough on the RSI scale. That's a custom relative strength, which it did again on October 13th, but not at the moment. Now, that's not surprising because the last shoulder low, hate to bring it up again, is not necessarily as oversold as the first shoulder low or even the head because of the size of the rally and the part of it, and the size of this downside correction, a significant part of it. So that's it. On a longer term basis, we may be seeing some pivot points. If my little rally, which I'm expecting, it'll last a few days, peters out and we see new lows, that'll be 2 weeks from now or something. And it'll be coming into the time frame for that major long-term, who knows, we'll see it when we see it, if it ever happens. And it may not. First chart, commodity, soybean meal. We have new highs for the trend. Trend is your friend. There was an upside breakout causing the yellow. That's overbought condition. It had a retracement to support, and we have new highs. It'll keep going some more. Next chart. Corn. We had a great signal last week. The high of the rally. That's what you want. That's what the system is built for. And only a few weeks earlier, December 7th, we had a fantastic past tense buy signal. A couple of signals in here that didn't work very well or at all, probably small losses, frankly. And I'm going to leave it at that. That was corn. Next chart, live cattle. Got overbought, retracing. I expect it to bottom out maybe a little bit lower than the low of last week, but there's support in there and the trend is up. So I'd be looking for buy signals. I like the looks. I'm still friendly bullish. Next. Natural gas is just simply too oversold to go short. The downside breakout was obviously a few weeks ago, so it's probably about to turn around. You're oversold today and a couple of days ago as well, periodically, in fact, on the way down here. So I'm looking for a minor short-term bounce and then probably the continuation of the bear trend. Next, high-grade copper, HG. Trend is up. We had a fantastic buy signal. It was September 28th, and we look like we're about to make new highs for the trend. I would expect so. It's already bumped against the support a couple of times, and triple tops or quadruples are just basically don't exist for quadruples, but triples are pretty rare. Next, platinum. Outside up day after coming back down into support, the highs in general that we saw in the last couple of months into early November. And now a new high close for the trend and almost a brand new high. That looks real good. Next, wheat. Oh, okay, I got to mention it again. Of course, we got the top of the market at the beginning of the war when after a series of limit up days. Again, this is what the system is built to catch, is these kinds of turns. That was a whopper. You're not going to see that again for maybe years. Reminds me of 1972. I started in 71, the Russian grain deal. Currently, bear trend, getting modestly oversold, nothing fantastic. I expect to see new lows very soon. Next chart. Live hogs, new low for the last couple of months since early October. And on a closing basis, likely, I would expect to see a move down to 75 to 70. It may take a couple more weeks, but you have to be bearish. New low close for a couple of months, failure to make new highs on the major rallies for several months. We got an ER sell signal almost on the high day. Okay, next chart. Coffee. Caught the bottom of the coffee market, and that was November 21. And there was a nice rally, but the long-term trend is down. So I'm not frankly expecting to see more rally at all. This is not oversold yet. I think we're going to make new lows very soon. Next, OJ. Trend is up, sideways market for a while. Excuse me. Got overbought on the 2 rally highs. Kind of neutral for the moment. Next chart, soybean oil caught the bottom of the market a few weeks ago. Trend is very ambiguous on a longer term basis. In fact, one could make a case for a giant pennant formation, the start of which is early April. Next chart, soybeans. Oh, same kind of comment, except that there's really not a pennant involved in here. The market got overbought a few days ago. It's come back to some support. I think it's going to start to make new highs above 1537 soon, very soon, next week. Next, we got heating oil. Inside day, 2 days in a row. That's a tiny pennant formation, you could say. Neutral. I'm going to wait to see what happens in the next couple of days. You do not have to make a trade. Wait for opportunities. Wait for tools that you like to use to give you signals. Next chart. The E-mini, of course, October 13th bottom, also had 2 premature buy signals within a very short time frame of the actual October 13th turning point, warning you in effect that the market was trying to turn up and not very successful. But yeah, there was a little profit for a day or two. The same kind of comment I would make for the S&P 500 in the beginning. I'm looking for an upside breakout. I need to see some more follow through to the upside. I want it to close on a strong note near its highs on a Friday, the end of the first week of the year. Next chart. Sugar, now oversold, officially yellow. I would not be going short. I'd be looking for buy signals or reasons to get out of any shorts that you might have. We did get overbought on the high of the rally, but no bearish engulfing, unfortunately, no ER sell signal. We did catch a reasonably good one back November 22nd and almost the highest high on October 17th. But yep, those are the ones you love. Back on April 13th, we caught the top of the bull move and the beginning of a bear move for over a month, or about a month. Next chart, bond futures. I've been implying, sort of like the stock market indexes, that there may be a long-term bottom developing in interest rate futures, the 10-year notes and the 30-year long bond. Today, of course, the 30-year long bond is strong, implying rates may be stabilizing or going down a little bit. So that would correlate with a rally in the stock market. You would think. Really haven't come to a conclusion here. All I can say is it just got oversold, and it's been up almost every day since that situation. Now it's not too far from being overbought either. So neutral momentarily. Next, 10-year notes. Same comments. Almost had a bullish engulfing, but not quite. Yep, same comments. Gold, we did catch the first of a triple bottom, and again, they're fairly rare, with our ER buy signal on September 28th. Now we're kind of overbought, not quite enough like we were 2 days ago. So I'm expecting this to continue upwards, but a little bit slower. If it gets very strong very quick, it's going to get overbought again, and I would then be expecting a downside retracement. But this looks pretty good. It's chewing its way higher, sort of like an upper sliding wedge or pennant. Next chart. Silver. Neutral to friendly. I like the way this is acting. So far, all the downside corrections have held at certain levels, and you've seen a new high for the move in a short while. Next week, I think I'll see a new high again. Next chart is cocoa, top of the market a week or so ago, came down very nicely for 3 days on the average. We saw a 2-day rally, and today we're back down again. Not a lot. I think it's going to slip off some more. I think it's going to make a lower low than this week's low. Next chart. Crude oil. Long-term bearish, long-term downtrend. I think it's going to challenge 70 and get into the 60s next week. Next, soybean meal. Very strong. I think I started out with that chart. Yep, that's right. I'm back to corn. We got the short side of the corn market at the top so far. And it was an ER1, always, of course, when you see red or green, and an ER3 trade as well, at a little higher price too. That would be the signal was a 78 3/4. That's the entry price. Okay, this has been Stan Ehrlich. End of the first week of 2023. You have a great weekend. See you on Monday.